Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And guys, we had Jerome in the house again. And with the Russia and Ukraine situation, who keeps coming up? China. And we know they have the alternative system, the SWIFT, plus they're going to take the place of America when it comes to the reserve currency. But we have Elizabeth Warren and Mark Warner working beautifully with the Hegelian dialectic. And they're talking of regulation. Why are they talking of regulation when it comes to Ukraine and Russia? Because they want to take away all your privacy. Crypto was about peer-to-peer transactions, taking the middleman out. They want to be able to track every transaction. That is the whole purpose of getting rid of cash. They want to know everything that you're doing. Remember, the New World Order wants that all CNI, and that's what the blockchain does. And then we have Kennedy, who's also an artist at the Hegelian dialectic, but brings up some great points. But when it comes to inflation, from the House or the Senate, nobody admits they're the one who caused this inflation. Congress gave the Fed to print over $4 extra trillion that we did not need in the name of the C word. And now what they're doing is going to bring in the robots, algorithms, and drones right behind this war. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Conflict in the Ukraine, and it's going to have repercussions in many different dimensions. I think it will also have repercussions in the financial world, and I hope the Fed is tuning in and watching closely. I think the Chinese are particularly interested in the fact that we've been able to assemble a global coalition to basically shut down the Russian economy, and they will start thinking about how they can avoid that fate if they get into a similar circumstance. They have, I think, a rudimentary SWIFT system, which they might try promoting much more, which could interfere with the system that we have vested. And then cryptocurrency will be exploited. I think also, too, that the whole issue of the dollar as the medium of exchange for the world, which is the key that is really making our sanctions effective. The Chinese, again, will look very closely, as they have in the past. So first, I presume you're going to look at this issue very closely, and second, inform us of what developments.
Yes, yes to all of the above. It's you're asking some longer-term questions,
right?
About the reserve currency and the Chinese messaging system that is like SWIFT. In the near term, those are not going to be big questions in this one particular instance. But in the longer run, I think those things are very much on the table.
And so we will see at some point, and again, not in months, but probably years, movement, particularly by the Chinese, to insulate themselves from the same thing that they're observing in Russia now.
And that's going on now. I mean, that's been going on for some time. So this may change the trajectory.
It's an accelerant.
Yeah.
Right. Thank you, Mr. Chairman. Thank you very much.
Thank you,
sir.
Ukraine, the centerpiece of the U.S. response is economic sanctions. The U.S. and its allies have rolled out some of the strongest economic sanctions in history, severely restricting Russia's access to the global financial system by sanctioning the biggest banks and companies, by kicking Russian banks out of SWIFT, the International Payments Messaging System, and by freezing the Russian central bank's foreign reserves. Now, these sanctions are powerful, but Russia can dodge some of this pain by using the same cryptocurrency tools that are currently used by drug traffickers, cyber criminals, and tax cheats. I'll pick one example here. We've all become familiar with ransomware, where a cyber criminal infects someone's computer system, locks it up, then demands payment in order to unlock the system. And how do they get paid? Through unregulated cryptocurrencies like Bitcoin. Chair Powell, do you know who cybersecurity experts say is the world leader in ransomware attacks and in getting paid through cryptocurrencies that allow them to obscure and hide their trails.
I could guess, but
You want to make a guess here? Based on what we're talking about today, it's Russia. You know, if you listen to our own national security agencies, the answer is Russia. And that's why when President Biden held an international summit last year to fight ransomware, Russia, the biggest source of the problem, was intentionally not invited. According to one estimate by the blockchain analysis company, Chainalysis, Russia-linked actors collected nearly 3/4 of all ransomware revenue in the world last year, and hundreds of millions of crypto dollars are collected in Moscow each quarter. As much as half of those come from illicit crypto wallet addresses. Russia is the world's expert on moving money outside legal channels. So, Chair Powell, obviously, you do not administer sanctions, but you are an expert on the international financial system. So I just want to take a look at this. Are other countries currently using cryptocurrencies to evade sanctions? I'm thinking here of North Korea, Iran, Venezuela.
Honestly, it's not something we're responsible for. I have read it. I've read publicly that those things have happened, though. Yes.
Well, the Treasury Department, the Department of Justice, the United Nations, and the IMF all say that the answer is yes. Crypto takes the sting out of sanctions. And in fact, the Treasury Department warned last year that crypto could undermine our sanctions regime. Theoretically, the crypto industry is supposed to enforce sanctions as well. So let me ask, Chair Powell, is the crypto industry enforcing sanctions right now?
So what I've read, again, we don't. This is really for the Treasury Department, but I've read the same things you have and that you had in your letter, which is some reluctance expressed on the part of the crypto industry to do that.
All right, they are supposed to, but the problem is they haven't been doing a very good job. Just read the Treasury Department's sanctions review or the Yuan reports on sanctions compliance. We know that many crypto exchanges and wallets are not collecting information about the identities of their customers, are not screening their platforms for illicit activity, and are not reporting sanctions violations. Heck, this is how North Korea has been able to move money around and finance its illegal missile programs. Here's the thing. The whole point of crypto is that it allows someone to conduct financial transactions without having to go through the traditional banking system or traditional financial intermediaries. Right now, millions of transactions are taking place that are completely unregulated with no one verifying who gets what. And that means that while sanctions can make it very difficult for Russian companies, political leaders, and billionaires to move money around in the traditional financial system, there is another shadow, unregulated world that they can turn to. Crypto poses a variety of threats to financial stability, to investor protection, to our environment. But crypto is also providing a new way for countries to sanction-proof themselves. Cracking down on crypto is a critical piece of holding Russia accountable for its aggression. We can't fool around any longer. We need to get new crypto rules in place. Thank you, Mr. Chairman.
Are very concerned about some of the leakage that could be taking place through cryptocurrencies. I think there is a great deal of value in ultimately digital-based currencies. But the concern I have is that crypto exchanges, DeFi, I mean, there's a stat I got the other day that I thought was very impressive. 7,000 stocks on our public markets, 17,000 different crypto tokens on crypto exchanges, literally 1 million crypto tokens being developed in decentralized finance. And I know this is not directly, this is more Secretary Yellen's purview, but you and the Fed have gained a lot of expertise in this space. Do you see the possibility, at least, of Putin or his oligarchs using digital payments and other alternative payment methodology to avoid these sanctions, in a sense, to transfer their assets out, since we've been able to kind of clamp down within traditional banking realm.
So you're right. This is right in the heart of what Secretary Yellen is working on. I believe she actually addressed this yesterday in some public remarks. And I'm not privy to any private information about this. You are reading about it. I saw that crypto transactions are spiking in the Ukraine and in Russia. I think it really underscores the need to have a strong regulatory regime that permits appropriate activity, but that prevents inappropriate activity. And we do have laws on the books and all that. But I think for digital finance generally, we need a legal framework that would really take away as much as possible of the possibility that people could use unbacked cryptocurrencies as a way to evade the law or to finance terrorism and hide their ill-gotten gains and things like that. I think it's very important.
And again, I appreciate the fact that the Fed has, I think, both expertise-wise, ramped up in this space. I do think, the notion of the United States having a digital currency, when we see the challenges around the digital Yuan from China, but I do think the amount of capital flows that are going into this area, non-banked in many ways, there is not that kind of clear regulatory overview. It's something we need to look about. And I think as an independent source, we're going to need to continue to draw upon not only yours, but the enormous resources you've got at the Fed to at least follow the capital flows. And I am gravely concerned that Putin and his oligarchs may use this escape valve to escape these sanctions. Thank you, Mr. Chairman.
The president has requested that Congress appropriate additional money to fight COVID. Senator Van Hollen just referred to it. Do we have that money?
I feel like I'm getting into fiscal policy here. I really want to leave this to.
Yes, sir. But do we have that money?
Do we have that money? Well, in the sense of
do we even have 5% of that money?
I don't know what you mean by have the money.
Will we have to borrow the money?
I think we're running deficits, so I think a lot of spending is on the basis of borrowing.
Right. Okay. Let me ask you about the sanctions on Russia's central bank. The West has sanctioned its bank. And you say it is, or some say that it has basically prevented from Russia from using those foreign reserves, because they're foreign reserves. They're not in Russia. They're in other banks in other countries. Has China joined in that sanction?
No, I don't believe so.
So if China wants to, it could support the ruble, could it not?
In theory, yes.
Okay. Now, does that sanction on the foreign reserves of Russia by the West, does that stop dollars and euros from coming into Russia?
I think other sanctions do. They're not getting any hard currency, and I think a lot of payment in dollars into Russia is coming to a grinding halt. Mm-hmm. By the way, I should say we're really not responsible for sanctions, as you obviously know.
You're not responsible for climate change either, but that doesn't stop the Federal Reserve or for elementary and secondary education. But that hasn't stopped the Federal Reserve from having an opinion. Not you, but some of your colleagues. Now, the West has said, the president has said, we're going to throw Russia out of the international community, and we're going to throw Russia out of the international marketplace. And obviously, we all agree with that. And he sanctioned everything. But he hasn't sanctioned Russia's energy. Europe is going to continue to buy Russian oil and gas, despite the fact that Europe has 1,000 trillion cubic feet of natural gas that it refuses to produce. And America, right now, we're continuing to buy Russian oil. So how are we going to throw Russia out of the international community and global markets if we don't attack their oil?
And that really is a question for the elected government, by the administration, and particularly the Treasury Department.
I know, but I'm asking your opinion because you're a smart man.
I appreciate that very much, but my opinion is that it's not something I would have an opinion on as Fed chair. It's just we don't do energy policy, we don't do sanctions. We're technical support. We're not the policymaker. So it would be like the Secretary of the Treasury coming in and talking about monetary policy.
Okay, let me take you back to the spring of 2020. Governments shut down the private sector in virtually every country. Markets are panicking. Everybody's looking at you to calm things down. You did. And one of the things you did, aside from the currency swap line that you established, well played. You said we meaning the Federal Reserve, are going to provide capital to American businesses. Okay? And you did. And you kept us going. And I thank you for that. Suppose, though, the Federal Reserve had said at that time, we're going to keep American businesses going and we're going to supply the capital, except we're going to use this opportunity to bankrupt the oil and gas community, the oil and gas sector. Where would we be today if we'd done that?
You'd be very unhappy with me, and appropriately so.
Why is that?
Well, because
some of your possible new colleagues think we should have done that. Because Raskin has talked about that. Said we should have taken the opportunity to at that point to bankrupt oil and gas.
So I don't want to get into the.
I just thought I'd slip that in. I'm not asking you to comment on Ms. Raskin, our reserve trust, or the other things that we need to get to the bottom of. I'm asking you to tell me what would have happened if we used that opportunity to bankrupt the fossil fuel industry, as Ms. Raskin suggested we should.
Well,
strike the Raskin part. That makes you nervous, I can tell.
I just, we're a creature of law. You passed the CARES Act. It didn't say anything about picking and choosing, and we weren't going to do that. We didn't do it.
You think picking and choosing is a bad idea?
I think, we actually have a document I have right here from 2009 where it's sort of our document where we negotiated with the Treasury Department who does what, and it talks about the fact that we don't get into allocating credit. We try to affect broad credit conditions. We don't allocate credit to particular industries. And that's a document that we think is sort of one we live with.
Thank you, Mr.
Thank you, Senator Kennedy. Senator Ossoff from Georgia's.
You buy a starter house and then you move up and you sell it. And these are families through a realtor selling it. Now we've got the big machines that are just buying up houses, throwing people out. And I think that's something that's going to essentially sneak up on us like the derivatives crisis and a lot of other crises in the past. But what you're going to do, and in your authority, is address the demand side of the economy. This is really a supply side issue, I would assume you'd agree.
Yes.
But if we do not address it, we will see continued inflation in housing and continued problems, and that's contributing significantly to the overall inflation rate. Is that accurate?
Well, I think in housing you've got it's land, labor, lots, materials, and it's very strong demand. All of those are scarce, and it's very strong demand hitting that, and so that's why you're seeing prices.
Well, now, will the interest rate increases, do you think, affect demand for housing?
I expect they will, yes. It's a very interest-sensitive sector.
Yeah, and so that will, home ownership, in terms of rental housing, that typically, because of the supply shortage, will be passed on to the renter, I would assume.
Yes.
Yeah. So,
cause companies to cut back. They're not going to have as many job openings.
Yes, I mean, it slows economic activity across the economy gradually because higher borrowing costs. People, mortgage rates will go up, the rates for car loans, all of those rates that affect consumers' buying decisions, and they, with a lag, it will tend to slow down
job creation.
In addition, it has effects through wealth effects because housing prices won't go up as much and equity prices won't go up as much, and so people will spend less. And what we hope to achieve is bringing the economy to a level where demand and supply are
in the business of agriculture. Personally, I can see that consolidation in the marketplace is a big deal. I'm talking particularly the meat industry right now, where you have four packers that control 84% of this country's meat supply.
Federal Reserve's balance sheet's nearing $9 trillion, which is more than double where it was before the pandemic. Could you describe how unwinding the balance sheet as a tool to fight inflation compares to raising interest rates? For example, would a $500 billion reduction in the size of the balance sheet equate to a 50 basis point hike in interest rates?
It would be a very crude calculation because we do think the signaling value of QE is a big part of it, and you don't have that when you're having the balance sheet run up. But I don't have that one in my head. You're right, though. That's the sign, is that it would be tightening policy. We really think of getting the balance sheet on running in the background and shrinking in a predictable way, and we think about the interest rates as the active tool.
Last question.
The underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.